Let's bring in David Kudla now. He is founder and CEO and Chief Investment Strategist at Mainstay Capital Management, joining us right now from Troy, Michigan. David, how are you thinking about the inflation data that was long awaited and at this point, if you take it at face value, seems to confirm that we don't have a whole lot to worry about when it comes to inflation?
Good morning, Scarlett. Well, unfortunately, the way I'm taking it is it's a meaningless number. What we've learned is where they didn't have the data for certain categories, they just entered a zero. So it's so far away from the trend, and knowing what the errors are, it may have been better to not report it again, but they at least should have the caveats out there about the number. So and here's what I'll say: if we look at it, moving into 26. I hope this doesn't, let me say this. I hope this doesn't give anybody hope that inflation is we're headed right back down towards target because we're not. And we're not with what's going on with the debt crisis we have in this country and around the world, what's happening with just the level of supply for bonds that are coming to market, for debt that's coming to market, treasuries, and we're going to move into a higher inflationary environment. So if anything, this number should not only be thrown out, it could give somebody a real misread. Kevin Hassett may want to do a victory laps about it, but it's not a complete number. There's data missing.
Sorry, are you surprised by the market's reaction here in the stock market?
No, if you look at it, the NASDAQ was down 4 days in a row. So we were due for, like we say, we're due for a correction or we're due for a little bit of a pullback. When this number came out, there was no, qualification around it. And boy, it looks great. Stocks would rally on that. But we've had a tough, this is December 15th to December 31st is seasonally a very good period for stocks. You have the Santa Claus rally and you have the pre-Santa Claus rally. And we've had 4 days of a sea of red. So it's about time to have a nice up day.
Okay, that's fair enough. We did mention the first rally in 5 days for the S&P 500. There's been a lot of concern over AI bubble fears. Micron seems to have provided investors a report that pushes back against that AI bubble fears, at least for now. How are you thinking about the Micron data point after Broadcom and Oracle's results were so poorly received?
Yeah, it's it's encouraging, and I'll tell you the macro or a larger data point I think is meaningful in terms of is this an AI boom or an AI bubble or an AI boom that's becoming? We still say AI boom. Does it have bubble-like characteristics? Yes. Is it scary when you look at an Oracle and what the amount of debt these companies are taking on could potentially do to them? These companies that have otherwise fortress balance sheets, wide moats, very healthy companies, but just massive amounts of debt they're taking on for AI CapEx spend. But we look at tech stocks are up over 25% this year, and what's happened to valuations? Because that's what people want to do, right? Compare it to .com and all the problems back then when you had companies that had multiples of 50, 100, 150, 200. The valuations of tech stocks are right where they started the year.
Yep.
So earnings forecasts are keeping up with price. So it's not that they're becoming significantly overvalued, even though they've gained over 25% this year. It's being reinforced, and we're in a great corporate earnings period in terms of reported earnings, the beats, and gross margins.
You got in your notes here the Yukon Cornelius rally. I get the reference. Very cool. It's one of my favorite characters. How does it apply to 2026 here? I mean, we can't have the same expectations in 26 in terms of the performance that we got in 25.
I will say this. We are still very bullish on gold, silver, and the precious metals, hard commodities in general. When you get into palladium, platinum, copper, Let's just take gold and silver, right? Gold, speculative investment. It's about the central bank buying. It's, the amount of central bank buying has gone up 5 times since 2022. I mean, they're looking at what's happening to fiat currencies around the world. They're looking at this debt crisis, and they want insurance. They want to diversify their reserves. They want insurance. China's been selling a lot of U.S. treasuries to buy gold. So we have that, along with investors looking at it the same way. How can I get some insurance against inflation, which we think is going to go higher in 26, at least for a period of time.
Right.
Silver has incredible industrial demand as well.
Yep.
That with the AI boom has grown even more.
Right. All right, Dave, thanks so much. Appreciate it. As always, David Kula, founder, chief executive officer at Mainstay Capital Management.